Hey guys, Elvis here from the trading room. Okay, let's go through trade plan and trade review for last week. So firstly, we'll go to trade review for last week. So we're on the US 500. We have a lot of volatility in the market, as you would have seen. I've been posting in the room. So be very careful on when trading or using the US 500 to trigger some of the other products, meaning the Wall Street and the N 2000, US 2000. Sorry. Um, Business costing and volatility. You would have seen the sell that was triggered from the ES here, the sell trigger for where we sold off in the morning. So we sold off and took profit early. We got a retest and push down. These are big moves, although the bars are looking small. They are 30 point to 40 point moves in the market, which is almost unheard of. So that is a 100 point move right there for the daily range, which is really wild because usually we'll be between a 15 to 20 point range for on a daily basis. Alright, so let's get to the S&P and what we're looking at for ice trigger. So you can see we actually double tested the bottom to the point or the pip we were looking for, which was exactly 3 deviation. You would see it posted on the Facebook stuff. That is why we signaled the buy, and you would see notes. Okay, so we have settlement was 26.18. We have Friday's POC a bit lower at 26.03. 26.03 is a reasonable target, and 26.37, which was we sell from yesterday. It came in later and just pushed back down, so that we first test the top on that. It would have a lot of volume here. So that is more or less the decision point in the market on if they're looking to if the bulls in control or the bears in control. So we are at the top of value area, which we set out for tomorrow Monday. So scenario one, which is push to the upside, test the one deviation, which is 26.40, push back down to open, and then go to the upside. Oh, we would have. I suspect we would have big gaps in the opening because there's a lot of risk in the market. So 6 p.m. this evening, you would see the futures market open. So that is scenario one, which is one to the upside. Scenario two is we dip to the downside. I actually looking for a buy on the 2 deviation move with support here. You can see we found support on the move with a bullish candle. Now these would be very moving very quickly, so when I signal, you should be setting up your working orders with our risk to reward based on that. So we'll be trading more or less because our costing would be the US 2000 or the Wall Street, maybe one S&P trade tomorrow. So you might see more or less a trigger that built off of the S&P chart and trading either the N 2000 based on the volatility and how much volatility we have. So we have a lot of risk in the market. Just make sure you manage your risk as best as possible on the indices, which is the US 500, the US 2000, the Wall Street 30, and the NQ, which is US Tech. Trying to stay away from the NQ because of how high the volatility and costing is. So let's move to the commodity side of stuff. Um, Let me just make sure we match the US 2000 chart. So you can see where we sold off in the morning. That was a big move. We took profit right here on the open because we just faded in the open because of suspecting doji and tested the open on the evening before. Tanked. Gone to the bottom. We bought the 1450 and it jumped up after 1 p.m. So we got tapped to the low and then come back up off of the 3 deviation, which was signal off the S&P chart. So we made 60 and 50 on this side. So moves are big, so hopefully market will calm down a bit during the week. Um, more than likely we wouldn't be looking to trade here unless it's safe place to trade. As you can see, we didn't hit the double bottom as yet, so more or less we might be going directly off after that double bottom in the markets. If we see it, we may buy it or try to catch the fallen knife as we call. We say so you see we actually just tested the first leg down, and so this is an important area right here, which will be called probably our value area low on the S&P. Right, let's move to commodities. So on gold, we had a reasonable. Well, day we sold in the night. We bought trade during the day. Advise if you wanted to sell between 12 and 1 to scalp. You made probably about a $50. So you made some money on the gold. I am looking to be a little bit more bullish or neutral on gold. We may have completed the expected move. This would be, if we look at the buy, we would want to be testing this 13309 area again, which was signaled the day before. So, required to clean up this chart a bit for when I'm signaling. So this is the buy area here. We may still be able to get one more push off of the 1325. So if we have a gap, we may look to sell through the gap on the long term basis. We've been selling for the past couple of weeks through the gaps and everything. We had probably had one failure of the point. So this is your top, the bottom. This is the continuation which we were in. You can see we started to consolidate a bit. So we have to look at the market very closely. So we're looking to buy a spread of around 133.10. If we get push to the downside, we probably would be getting into a 1300 spread to the buy side. We get a push to the downside and the test back to the upside. We just probably have one more minimum leg down on gold. We know the value of gold and how thinly it trades sometimes. So on oil, we were in a sell mode probably for the last 2 weeks. We tried to buy once. It didn't get filled because we were looking for a specific test. We got the test to sell off. Yesterday we went plus 60 if you was on multiple contracts, if you was on one contract. We had a specific target set within the range for us to actually get into take profit position. So we actually took profit. There is now a target of 1610 or 1612 to the upside. So we're looking to sell near the money or just in the money at $60 for a continuation to the downside. We have support located right there, so the range might be a bit tight on what you're looking at. So what we're looking at is getting the first order right here to fill on the to take profit on the sell side. So we may be moving into some consolidation now. So that is sell off for the week. You would see it have a breakout point here that we targeted, which is a long term, more or less long term trade. If you're looking for the downside move to continue straight through, we expect to reach just the midpoint and then look for consolidation in the market. When the market opens, then we'll see exactly what it is. We get the pop to the upside, we'll be looking to sell off the block right as we have it here. So look for sell positions on the oil on during the week. Right. So we went through gold, oil, that On the euro side, if we get strength or weakness on the dollar, we're looking for a test of 122.00 to actually get into a buy position back against, well, on a trend continuation basis on a long term against the trend. You could see we double bottom on Friday, so we're looking for a move to the upside. That may be signal according to which part the market opens, what spread we have available. We'll probably take that trade with a one contract trade, and if there's a lot of volatility, we should be able to take a smaller, well, a bigger risk of probably $30 on a per contract. So we only trade on one contract, probably two, but we don't like to trade on a Monday, a Sunday night open for that. With multiple contracts, so more than likely it might be one. Um, so let's go to the VIX, and the VIX is still a lot high. So you can see this big spike up to on the VIX. So if you go in either direction, I highly doubt that we'll hit very low unless there's a big breakout to the upside in the market. So the VIX maybe be hovering around. We see where there's two bars here. Between those two bars, if we do get a breakout to the upside, which is major breakouts on the VIX. The last time it happened was 2015. You can see the reaction of it, same. So volatility is back for a while, so we just had to make sure that we could be able to control vol while we trading on the market. So we still have a lot of value to be taken out by the market, because the market is looking to actually shake out the guys who came in long for the last 3 or 4 months. So it could go anywhere. On the odd USD side, yeah, maybe you getting into back to your buy zone to push, so you need a break to the upside to go with the goal. So this is partially why we looking to get the trigger to buy through on the odd USD, which is equivalent to correlated to our gold trade. So you can see we have triggers inside here, so we're just looking for a retest of the midpoint low, which is 77.90 to 77.80, to go to the upside and break this structure resistance here and go to the upside. Um, Most likely we wouldn't be trading it, just to show you guys how the correlation um on the USD CAD, which is the correlation for um, for oil, it's a 80% correlation. So we almost at a major target to the upside. We bought for the continuation to meet the target. That is the target. 2750 is your major target. So if we do continue to get a breakdown on oil, we expect a reversion back to support here, right here, and spike down. If we do get that, we're looking for a break to the upside. The continuation for the trade still have about 150 pips, 120 pips in our opinion. That wouldn't be a one-day move. Might be a slow climb unless oil tanks. And so we're looking for sell positions over here during the week, and buy positions probably on Monday morning or Monday afternoon to get into those positions. We ended up positive for the week. We suffered some losses on Fridays. According to how you manage your trade and kept some of if you kept some of your profit according to the management strategy that we have, and how much time you had to actually trade. Um, so trade small, trade smart, trade often. The system is built, well, trading strategies are built from a lot of experience and a lot of maths we actually use to actually get to train ourselves to actually trade in within this strategy, which has been a successful strategy over the past 4 to 5 years. So just carry on thinking and managing your trades through if you have time, or following the signals exactly where we put set take profits and stuff. Or if you see that you want to close off a trade early, it's up to you on where you want to close trades and how you want to manage through your trades, because management is what we teach in classes, and decision making itself, why you're trading, what you're trading, when you're trading. So I hope you guys had a profitable week. I should be online between 5 p.m. Eastern to 6 p.m. to see Forex open and futures open. Now the futures market wouldn't be open until 3 a.m. on Nadex, so I wouldn't be waking at that hour in the morning. Yeah, so we should be able to come back in probably around for half 7, 8 o'clock in the morning to see if we see any opportunities to get into the market. Okay, guys. I hope to see you guys tomorrow in the room. All right, bye.